is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Al in Tampa. Hey, Al, what's going on?
Oh, it's a beautiful thing. I mean, if your listeners don't get the gold report, they're missing out. I mean, with your gold report, you just printing money. I love it.
You're my best dad out there, Al. Let's go to Jeff in New Jersey. Hey, Jeff, what's going on?
Great. Hey, listen, I was calling to thank you. A few weeks ago, you were prompting on your show to fill out that $10,000 grant.
Yes.
So I filled it out, and just a couple days ago, I found $1,000 in my business checking account.
That's awesome, man. That's awesome. Yeah.
And I owe it to you, because if it wasn't for your prompting, I would have just assumed, no way I would have gotten anything. So I wanted to thank you.
No, we appreciate you growling a problem with us here.
Now, Tom O'Brien.
Good afternoon, folks. Tommy O'Brien coming to you live from TFNN. Thanks for joining me for the final hour of the trading day, and we got quite a day right now. S&P's off by 1.2%. We take a look at the charts. Let's kick it off. Down by 1.15%, right where we were at about 12:30. So we've been shopping around about a 20-point trading range from 6780 to 6800. We'll see what the final hour holds, but markets under pressure. We'll take a look at the banks in a moment. Dow off by almost 1,100 points. Goldman Sachs getting hammered by almost 5%. That's $1,000 equity. Crude pushing above $81. Let's go through it all. NASDAQ 100. Talk about a meltdown, man. Now, remarkably, we still haven't taken out. Yesterday was quite the day. You're looking at a daily basis where we have remarkable volatility. And yesterday, you do about 591,000 contracts in the NASDAQ. You jump over the Qs. Yesterday, about 71 million shares. We've done 72 million already. So I don't think we're going to get to a number of 97 million, but it's going to be a big day. We have the final hour. You got volume on the close right now. The Q's off by 1%. S&P's off by 1.1%. The Dow, as I mentioned. Look at this Dow rolling over, okay? You're making lows you haven't seen since December 10th today in the Dow. So much for the 50,000 hat. 50,611 was the high. Boom. 3,000 points. Just like that. 6% off of the highs almost. We're trading at 47,808. And as I mentioned on that Dow, you take a look at the Dow, some of the biggest equities out there. How about Goldman? We'll take a look at the banks in a moment, man. The banks are getting hammered. Goldman off by 5%. It's an $823 stock. Caterpillar, a $700 stock, down 5%. Okay, Johnson & Johnson off by 3%. Merck, only $100 equity. Not going to hit the market when you're talking about a price-weighted index like the Dow. But yeah, how about Goldman and Caterpillar alone? Those two equities, remarkable. You got Home Depot off by 2.2%. All right, take a look at the S&P 500. The software equities that have been getting hammered. You get Salesforce up by 5% right now. Intuit up by 7%. ServiceNow up by 6.3%. As I mentioned, how about the financials, right? Morgan Stanley off by 4% and NVIDIA off by 1.3%. Okay, we jump over to yields. So quite a pop in yields. We opened Sunday night at 3.95%, 4.15%, 4.15%. In that 10-year. And yeah, we're getting a little bit of an acceleration. We're at highs we haven't seen in the last 2.5 hours. And we'll see if we can break above this area right now. S&P, same thing. You're breaking out of this consolidation. We got a little bit of buying. See that volume uptick? These are 5-minute bars. We'll put it on the 10-minute. And yeah, right at 3 o'clock. Look at that buying. You do 60,000 contracts. You break away from the lows. We'll see if we can get some action going. But you have a little bit of buying. Well, let me go back. Yeah. That's a nice spike in volume. We'll see if we can get some follow through. So we get the 10-year at 4.15%. It's going to be quite a problem if we're dealing with higher yield. We're going to get to crude. That's the big story right now. Dollar at 99.15 and crude. Now, I don't know what just happened if something happened at 3 o'clock, but crude tanked $2. The market's rejoiced, and it is a headline-driven market right now. So that's a 5-minute, 10-minute bar. You take a look at the 5-minute. Yeah, right at 3 o'clock. Same deal. So you have crude. They're selling crude. They're buying equities. And we'll see if we get slight easing of tensions. And gold down $53 off 1%. But boy, the equities are getting hammered today, folks. And silver off by 1.7%. But boy, some of these equities, even the best equities out there. You got wheat and precious metal. You're down by 5% right now. And those silver stocks, man, 10, 11%. First Majestic down by 10%. Hecla down by 6%. You're trading prices in Hecla that were almost back to where we were trading on December 11th. And Endeavor, yeah, down 8.6%. The XAU, as I mentioned, down about 6%. All right, you jump over to some other metals. You got platinum down about $35 or 1.6%, and copper. Let's check out the copper stocks. Yeah, everything's getting hit right now in this metals market, man. Southern Copper, you're down by 8%. Freeport-McMoran down by 6%. You go over uranium, you're down by 6%. Look at this, right? No hiding right now in that commodity, whether you're talking about gold, silver, uranium, platinum, metals, period. And we'll see if that's, this dollar, if we really get a change of tune here in terms of the strength in this dollar, man, that was quite an acceleration we got going this week on a daily. And take a look at this dollar we got on a weekly. We've rejected that same price area that we were at on January 12th, that is. Excuse me, January 19th, the week of. But I don't know, the way metals are behaving right now, we got king dollar action. We're back above 99. All right, let's check out these software companies. I was talking about Salesforce earlier, so check this out. Salesforce, man, you're up by $9 today. You're up by 4.6%. Their earnings were last week, and you got a nice bullish engulfing. You take out the last 2 weeks. You do it on as much volume as almost the 2 weeks combined. Not quite, but you do 95 million, taking out 43 and 73. Now, we're not going to get that type of volume follow through this week. We're at 47 million, but we got action. You go down to a daily on Salesforce. Yeah, that's some decent volume, but you're going into these highs. All right, we're going to take these out on lighter volume on a daily, but you get some nice strength off the bottom here in Salesforce. And maybe these software companies, as the market's taking a hit right now, some of the market's saying, you know what, maybe it's not a max pain situation like they've been penalized. And boy, let's take a look at these banks, because yeah, you talk about a rollover, man. So this is Goldman. Goldman was just approaching $1,000. You're at $829, man. You're down almost 17% from where we were this calendar year. And you got some volume. Look at this selling. That was a shortened trading week, the week of the 16th. We're at 11 million right now. Goldman down by 4.3%. Morgan Stanley down by 3.5%. Citi's off by 2.4%. You don't want to see the banks in trouble. All right, folks, stay tuned. S&P's off by 65. We'll come right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. S&P's off by 66. You get the NASDAQ 100 off by 205 right now. We take a look at some of the leaders. NVIDIA. So, quite a volatile session for NVIDIA. You trade down to 178. We're clawing it back. Not quite the volume you saw at the lows right now, but an acceleration in volume nonetheless. A little bit of a pickup. Down $1.10 in the session right now. Microsoft up 1% today to 409. Apple shares down 1.3%. But as I mentioned, you're talking about these software companies that have been getting hammered, right? Adobe up 3.5%, Intuit up 7%, Synopsys up by 2.2%, Datadog up 3.7%. Let's check out Booking Holdings up 8.5%. What's this thing got going on? So what do they got? An upgrade? BTIG. They got a 62.50 price target. All right. Let's check out this thing up by 8.2%. So company formerly known as Priceline. All right, $145 billion equity. And, on a daily basis, so look at this. Let's see. It's a nice sign of strength, February 27th. All right, look at this. Some of these software companies, we're not exactly getting follow through, but you got a nice sign of strength at the bottom, right? You look at bookings up by 8.2%. Salesforce, very similar. A nice turnaround last week. You take out the prior week, you engulf it, you do it with volume. Let's look at some of these other ones. What's Intuit doing? Yeah, very similar. Okay. Doesn't mean you can set it and forget it on these equities, but that's a sign of strength on all these. You had some earnings on some of those equities. Let's see some of the others. Adobe. Not quite as pronounced on Adobe. Didn't quite get the buy in there. Adobe up by 3% right now. AppLovin, same thing. Not quite the convincing buy. Look at all that selling. You didn't have the buy and step back in. Well, you did in Salesforce. And you did in Intuit as well. And boy, if you can peg what's going to happen fundamentally in the world, in terms of, you're talking about Intuit, QuickBooks, Credit Karma, ProTax, all these labels. MailChimp, marketing automation, all this stuff is ripe for AI. But maybe they're going to be able to capitalize on that. I was in Walmart yesterday. We'll get a Walmart mention in the program. And they have some type of tax service in there. I think it's $149. And realistically, that should be something an AI agent can solve pretty quickly. It should be something probably our own government puts out as an AI agent, right? To help you do your taxes in a simple way that doesn't cost you money, since it's something we all have to do. It'd be beneficial if one of the things we pay taxes for is the ability to not have to go pay a bunch of money to file taxes, especially for people not making a lot of money, that they don't have a sophisticated tax service. But nonetheless, you got buy-in today, man. The charts say that is a buy, period. All right, let's talk a little crypto. So you're going to see a lot of this one. I saw people posting in the den about crypto having access to the Fed now, and crypto fans have an alternative to a savings account. Banks are freaking out. Well, we'll see where they go. And the only thing I really want to say is buyer beware. Anytime you see a yield, folks, that's over the risk-free rate of return, you better believe there's risk. Period. End of the sentence. That's it. And the yields that are offered, I mean, right here, right? As much as 12% on the money she holds in stable coins through Binance. Stable coins are not insured by the FDIC. And if you give some of your money and you think it's risk-free and they say they're going to pay you 12%, folks, okay? And we'll dig further into this as this becomes a real deal. I'm going to make some YouTube videos or something because, you know, competition is great. And yes, banking needs to be quicker. There's no reason why funds should take 3 to 4 days to clear, right? All of these things that cryptocurrencies, the blockchain expedites. But in the same way, okay, you know, a lot of these yield accounts are talking about 12, 14, 21% yield. Buyer beware, to put it lightly. Take a look at the volume. All right, we got tomorrow volume to go. We're already above where we were last week in the S&Ps. You're at 7 million contracts in the S&Ps. We take a look at the SPY. Not quite over where we were last week, but we're at 350 million versus 375. And the biggest day out there is 495. I don't know if we'll get to 495, but we might. We got volume today for the half hour on the close and tomorrow. Let's check out the diamonds. Yeah, look at this. It's going to be a big week in the diamonds. You're probably going to take out anything we've done. This is going to be the biggest week of volume we have in the diamonds. Going back to November. Because you're already at 34 million. And the biggest week you have out here at the highs is 41. But you're taking out the Christmas weeks when we had nothing in the diamonds. And boy, if we got problems with Goldman Sachs, and we don't necessarily have problems, folks, but look at this run. Right? Goldman just trades from 439 to 984 in less than a year. Even a 382 pulls this back to the consolidation you had towards the end of 2025. Goldman off by 4%, 831. Morgan Stanley off by 3.2%. And what else was down in the Dow? Caterpillar. That's right. Let's take a look at Caterpillar. Because if you're trading the Dow, you got to keep your eye on these. And that Dow, when it rung that 50,000 bell, look at the run the Caterpillar and Goldman had, right? Two equities approaching $800 or $1,000, straight run trip. Look at Caterpillar from 278 to 789 in less than a year. You want to be a little worried. Caterpillar, a 382, just a 382 of the run it had in the last year. Straight line move, 588. You're at 700. But guess what? You just traded down $90 in the last month. So what's another $110? There's some volatility out here. All right, speaking of, we're going to talk to our man Tim Ward when we come back, folks. We got the VIX at 2363. We're coming back with Tim Ward. Stay tuned.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We get the S&Ps right now down about 58 points, a little bit of a bounce off of where we were the lows at 230. And to talk about some of the market action, folks, we're going to jump over to our man Tim Ward. You can reach Tim at his website, folks, every trading day, ord-oracle.com. You see it right there. And don't forget, at the front page of TFNN, under the Services tab, you'll see 2 great webinars, The Secret Science of Market Tops, How to Identify Market Tops, as well as 6 secret ratios every trader should know. You see those ratios there, and we talk about them sometimes during this segment. Tim Orr, good afternoon.
Yeah, good afternoon. So, kind of a lackluster market, but sentiment says we're at a low. The trend's not really saying anything. It's actually kind of low. It kind of worries me a little bit. But we're going to look at sentiment first. This is the bottom window is the 21-day average of the equity put-call ratio readings. Next higher is the 10-day average of the equity put-call ratio and 5-day. And when all three of them get 0.65 or higher, and I noted those times here, and we're currently doing it right now. And so we're in a low area. It can be off a couple of days, but it's not usually off weeks. So we're within days, I guess, of a low. We haven't seen it already, but we're in the vicinity, according to Sim. When everybody kind of leans bearish, the market's usually near a low. When everybody's kind of bullish, kind of leans to a high. So that's one indicator. I'll always have to have 2. And here's a couple of more. This is the SPX VIX ratio, I guess. Okay, that right there. And one below this is the daily SPX VIX ratio, and the one below it's the SPX. And I got Bollinger Bands on both of them. And when you hit the lower Bollinger Band, sometimes you just hit it, sometimes you can close above it. But all those times are usually at lows. In other words, the market's got stretched too far too quick. And so this is actually 2 indicators. You got one on the SPX, and you got the SPX VIX ratio both hitting the lower Bollinger Band. This is on a daily. And the weekly, I didn't put it on, but the weekly also is hitting that. You don't get as many signals out of the weekly, but when you do get signals on the weekly, it actually adds to the confirmation of the signal. So I think we're at a low. Next week, according to seasonality, it's supposed to be an up week. Can we get back to this low here a couple of days ago? I think this is Tuesday low. Maybe, maybe not. If we don't get it there tomorrow, we're probably not going to get there. But we're at a low area. So you got sentiment, and you got the Bollinger Band stretched down to the lower Bollinger Bands. So I'm bullish. I'm staying long. How high is high? I don't know yet, but I think we'll get back to the upper Bollinger Band if not we actually break it. I thought we might get to 7. This is the SPX, I guess. I thought we might get to 7,000. And what happens there, we'll have to decide what goes on next. So we'll see. I'm staying long, kind of been long since October. But, the market just kind of gone sideways here. I mean, it's just did a lot of nothing. And I keep getting, decent signals, so I'm staying long until one of these signals fail, or actually we get to an upside type situation. So, actually, I'm going to skip something here. I had a listener from TFNN asked me on USO. That's the oil ETF. And he emailed me. He should have emailed you, but he emailed me, so I thought I might put this on. And I think I presented this chart in the past, and I thought it's worth going over. This is a huge view. This chart goes back to 2009, and it's a monthly chart. And I think I talked about it. We talked about it on your show about the William O'Neill's cup and handle thing. I don't know if you remember that. But anyhow, there's the cup, and the handle is this sideways thing going here sideways. And the tighter that handle is, the more power that pattern has. If you notice, Iran's got bombed, and it's putting kind of a pressure on the oil issues and stuff. But we were actually bullish, I think, 3-4 weeks ago, or actually a couple of months ago. I think we talked about this. These cup and handle patterns, if you ever did analysis of them, normally they go 300%. So this one started, I hear the music, so I guess we're on a a break right now.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
All right, welcome back, folks. I guess having technical difficulties, so Tom's not on right now. So at the moment, I'll be your host for the time being, but maybe he comes right back on here before shortly. Don't know. But anyhow, this is USO. A TFNN listener asked me to cover it. Anyhow, this is a breakout. This is a major breakout. We think we did some cycle analysis. It took a year and a half from the USO go from where right here down.
Hey, Tim, can you hear me?
There. Hey, I hear you now.
Go. Hanging in there and taking over. I got a storm in the middle of Florida, I think, hitting me. I got kicked off. We'll see. On, but I got the storm kicking me right now. But thanks for hanging in there, man. So go for it, please. Go for it.
So anyhow, it took a year and a half from this decline to go from down to there. And analysis, it kind of works. There's a lot of symmetry in analysis, and so it may take a year and a half to go back up. If that's the case, you'll see a high in July 2027, which is about a year and 3 months from now. But anyhow, this is a major breakout. So anyhow, I hope the TFNN subscriber. Appreciate that analysis, but I'm long this issue back in the 70s, so I'm holding long. So I think I presented this at one time. Remember that, Tommy?
Yes, I do, for sure. I was thinking, yeah. Man.
Yeah,
and, I appreciate you bringing up that chart because it looks like it's up a lot right now. $5 to $96, but boy, you look at that thing, man, and some room to run. Yeah.
Yeah, it's got room to run. So it looks like a Head and Shoulders bottom. It's also a William O'Neill type thing. So this is something that's not going to be just a flash in the pan here. It's going to go for a while.
Consolidation at the lows there, right?
Pardon?
Pretty year consolidation at the lows there, basically. As you you quite a move, but you're talking where we were. You're at $75 10 years ago, and here we are breaking out of that area.
Yeah, it's for breaking out area. So anyhow, we're done covering that. So I wanted to present it. So anyhow, let's look at the gold market.
Okay, what do you say? Yeah,
it's just really. This is today's chart. Anything above minus 10 or 0, we're hanging around plus 16 when I made this chart. This is 50-day average. Even though we're off here, internals still look fine. Let's look at the smaller chart. And normally you get a divergence. This one was back at the October high. The market, this is GDX up here on the top window. The GDX yearly ratio did show a bearish divergence, and you got to pull back, but both those other indicators, which is the daily cumulative advanced decline and daily up-down volume, didn't show a divergence at all. We still don't have a divergence in any of these, even though the market's pulled back. It's just not showing. I'm going to skip ahead. Here's another chart that kind of shows divergence. Even though we made higher highs here, all three of these charts didn't really show any divergence at all. So I think what's going to happen here, you got a high here, and you got another high is actually a little bit higher than we're retracing right now. I think you may go up to one more high, then come back down, and it's called three drives to top pattern. That may be forming. It's too soon to say yet, and maybe we just pull back here and just start going straight back up. Don't know, but on a bigger time frame, I would stay along these gold issues because on an 8-minute term scale, they're not really showing a major divergence. It just momentum rules kind of like all indicators. So I'm thinking in general, we're going to still move higher here. Just I think the equity market looks good this year, and the gold market looks good this year. And actually, inflation actually is coming about too, which is GSG. I should show that chart next. I'll show it next week, and inflation is actually going to come back in the market here. So, which helps gold out, and probably USO is probably the culprit of that, because if energy prices go up, everything will go up with it. So it's going to be an inflationary period. Everybody kind of asks me, not everybody, but I do get requests, I guess, to present a stock. And this is another low price stock, no guarantees. It's 12 cents when I showed this one. But it's a monthly chart. And it's the same pattern again. You got to have a sign of strength through the mid-Bollinger Band. And this is a mid-Bollinger Band. You had a sign of strength through it. It's still around 12 cents, but the last time this setup happened, it actually came back here. It was not a great buy because it basically doubled before you got into it. But this one kind of a little bit better scenario. But anyhow, another gold issue. All these things I'm showing are basically penny stocks, but they're in a gold issue penny stocks, because I think the gold market is placed to be over the next months, if not years. And this is another one that may perform well. So we'll see how that turns out.
And that GSG, that's the ETF that you had talked about before, the commodity ETF. Is that the one that you brought up? Yeah. That's quite a move this week, man.
Yeah.
I just pulled it up even this year, right? We were talking, you went, and pretty remarkable that you were, I have it up on.
If you fade it out again. Storm down there. But, GSG. Okay, you back in? All right.
I think so. There hit me. Sorry. Oh, if I had the chart up, yeah. So that is that's a great one, man. Maybe we're having problems. I'm sorry.
No, it is what it is. But that GSG, I think we were talking 23 area or somewhere in that vicinity, if not mistaken.
Yeah,
and
definitely. It was late 2000. Yeah,
I think it's.
But yes, now it's at 28.40.
Yeah, I think it goes to 40 range, maybe 50 we get lucky, so I don't know. But that's another one. All these, they're all inflationary type stuffs going on. If the equity market's going to hold up through all that, I don't know. But what I see so far, it looks okay. So I'm staying long on the S&Ps. Gold issues would definitely be long. There'll be some consolidation along the way. But I think the gold market, I do have charts where you compare the GDX to the QQQ, and I also have GDX compared to the SPX. And the gold issues by far is outperforming the equity markets, both on the NASDAQ and the S&Ps. And I think that trend is going to continue for quite some time. So this is a place to be. So as we go forward here, the money. The big money back in 2000 was made through the gold issues. The equity market went up with it, but a lot of these gold issues just kept on going, and so I think that's the place to be. So we'll see how that turns out. I don't know. You got any questions?
No, I'm still staring at that G. Because man, if that's making that type of a move, and that one has a concern. I mean, you're breaking out. I mean, pretty remarkable that we just broke the 2022 highs, which is wild when you think of where that thing took that long, and you're talking about inflation and commodities. Pretty remarkable, man. I appreciate it.
Yeah, well, matter of fact, we had to have a sign of strength through that neckline, and that's exactly what happened. So,
yeah.
You want me to hold on? You want me?
Sure. You want to come back? We'll come back and finish it, please. We'll stay right there.
All right.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Open It Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Open Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We're talking and Tim Ward, and I see Tim. I appreciate you hanging with. Something's going on with my connection, but I see you got silver up there. Are we going to talk a little silver? Perfect.
Yeah, a little. We had a big plunge in silver, so I did the silver to gold ratio, and I put I put a rate of change on it at 12. And every time it got down below minus 20, we hit actually below 30. I marked those with those lines, so it's kind of a rare occurrence. And most of them, excuse me, most of them came at significant lows. This is XAU on top rear, and it shows the times when those signals came. And the only time it didn't come, it was at that top. But I think we're in the beginning of a bull market, not the end. So I think this plunge of silver compared to gold was actually a buying opportunity. That's my point, the whole thing here. So we kind of had a climatic pullback in silver compared to the price of gold, and they got the rate of change below minus 20, got to 30. And so it picked out significant lows. So anyhow, that's, even though there was a big plunge, a lot of times plunges, if it's coming off the top, it can be bad, but momentum's still going up on these issues. So I still think this is silver-wise, this was a few days ago when silver plunged against gold. But I think on a bigger time frame, in other words, multi-month time frame, it turned out to be a buy signal. So it's not a bearish sign. It's just a shakeout and an uptrend. That's all I'm saying. So, how high is high? Don't know, but I'd say silver compared to price of gold. I think silver's still going to perform here. So I just wanted to point that out. So we'll see. All right. Hey, I guess we're done. Tom's got some weather issues in his state down where he is. So, anyhow, thanks for attending. If you have questions, email Tom, and we'll try to present them on our show. Thank you.